Asha, it's like week has come and gone and there is no pronounced trend. I mean, you would have hoped that even though it's a truncated week, you would have got a directional move, whether Nifty will go below the range or when Nifty will bounce right up the range. In this week's price action, frankly, it's not been a week where you could say that, okay, markets have given you any kind of a decisive move. And the surprise this week actually has come from none other than HDFC Bank. Who would have thought that a drag on the market, HDFC Bank, actually would be the ledge on which the market fall actually would get arrested. This week, look at HDFC Bank, compare that with what the Nifty has done or the Bank Nifty has done, and frankly the V-shape recovery, if I may use the V-shape here for HDFC Bank last 7-day price change, I think it's an interesting one.
It's a classical V in fact.
Yeah, I mean, I never thought at the beginning of the week you would actually see this kind of an comeback from HDFC Bank, which has acted like a ledge. So whether it's HDFC Bank or Reliance or whether it is some other heavyweight, bottom line here is markets are not breaking out and markets are not going higher. I think we are typically in a range where we're going to spend time, and you'll spend time just at a time when there is price discovery which will happen ahead of the earnings season. Globally also, while there was a spike in bond yields, uptick in crude, all that frankly has got arrested. The concern now is the FI selling. FI selling I think is large. That is something which is coming at a time when there is a global macro ripple, and that is something which cannot be ignored. Now look at that number. Thank you domestic institutional investors, thank you retail investors, thank you HNI investors, but it's a selling in Indian stocks at a time when just about everybody is gung-ho on what is happening in the world. If the selling continues, the downside could be more pronounced in the short term. But if history is something to go by, and what both of us have reported over the years, is that every time an FI is an intense seller, if you invest in the market, you actually benefit from that. So I don't know what will happen in the next couple of days, but next couple of weeks and next couple of months, if you buy this fall when FIs have sold in FI-dominated stocks, you actually would be rewarded.
But I wonder why the selling, and it's not like this selling is a minuscule number. Yes, okay, I mean, yesterday's was 521 crore rupees, which in any case, standalone is not a very small number. But we've seen this week 2700, 2750, 1361 kind of sellers from the FIIs.
So, see, each one has a different kind of a compulsion. But the prima facie reason I think is the spike in bond yields. So, which is if you are in foreign institutional investor and global allocator, what are the options in front of you? You would say, look, the back home American benchmark rates, which is the 10-year paper, is giving me about 5%. I get 5% I get 5% a short return. That is a very impressive number because historically you've not got that kind of a return in American bonds. Or you say that, okay, I'll chance my arm, I will take a risk of currency and volatility, and I will go into emerging markets like India. Nobody will go to China, they will come to India. So at India right now, if you're coming, there are state elections and there is central election cycle. Markets are not exactly very cheap. So it's a toss-up. 5% of a short return or a projected return,
high risk, high reward kind of
return.
Scenario.
So a lot of money is gravitating because of that, and the dollar index has also shot up. And frankly, the markets in India are not very cheap. I mean, is like a cheery consensus in the world right now in terms of where the pricing is. And what has Buffett always told us? That you pay a heavy price for cheery consensus. So I think it's perfectly fine to imagine what is happening. Also, a lot of private deals are happening. A lot of IPO market activities happening. A lot of blocks. Suddenly the block deals have stopped. So a lot of things are actually happening. So I will not read too much into the flow. But if the flow pattern is anything to go by, every time foreign institutional investors have been compulsive sellers, I think there's a compulsion here. You should benefit by buying some of the stocks they're selling, not because of valuations, but because of the back home compulsions.
Well, yeah, and that's exactly what the DIIs for sure have been doing. Let's also take stock of what the global setup is looking like this morning, because much unlike yesterday, it's not really a cheery handover from the US equity markets. Yes, the bond yields continue their retreat, but Asia Pacific stocks have been trading higher ahead of the US jobs report. That's going to be another critical data point coming in this evening. So absolutely flat pretty much across the board in Asia as well, while there are aberrations like Hong Kong, which is scaling higher by nearly 2%. That's a 300-point gain. Japan is absolutely flat. Korea flat. Periphery markets like Australia, about a 0.5% uptick there, and it's flat for Shanghai as well. But the Nifty implied open rate adjusted for the gift Nifty and how we shaped up yesterday, that's indicating some more upside for us, marginally higher at that, and that's already indicating levels of 19,600 for us. So that looks pretty okay. And I think, like you said, the key data points, besides, of course, what we get for the US economic parameters, is really what the bond yields do and what crude does from here.
See, GRMs have collapsed, and GRM is like a canary in a coal mine, which is it tells you where demand is moving. So crude demand is not very high. You can pump up the market artificially high by cutting demands to a certain level, but that's not holding true. So while you saw an uptick when the OPEC nation and the non-OPEC nation, they decided to cut production, the demand follow-up, I think, has not come back. Otherwise, the GRMs would have not expanded. Crude prices are struggling to stay above. So the natural course of direction for crude, both technically and both based on the fundamental demand structure, I think is on the downside. So while crude becomes an irritant now and then, but more and more evidence is now visible in terms of historical patterns, and I think we'll show perhaps the data in the course of the day, which is that there is no linear trend that every time when crude has gone higher, what has happened to the markets. So I think crude is in a manageable zone right now. Inflation is not spiking higher unless we get some kind of a global ripple. I don't think from an inflation standpoint it really matters. Now, since you have MPC, we'll talk about it. And if you frankly ask me between the last MPC and today's MPC, what has changed? I mean, nothing has changed. I continue to maintain that Reserve Bank of India communication was very clear that inflation is manageable. We are ready to fight it out, but we cannot call that a victory on the inflation. So I think the line which we used to summarize the inflation MPC mood point last time was that the guns which had gone back to the barracks, the guns have come out. But I don't think the guns today would be used to fire. So you're keeping your guns ready in case inflation goes something here and there, you will fire. If RBI was worried about inflation, I can assure you, Aisha, they would have not reverse the entire ICRR measures. I mean, in fact, everybody is now talking about the market liquidity is tighter than stronger, and global inflation is manageable. So Reserve Bank of India, I think they will not raise a victory flag, no Kesariya from there. I think it is not going to be a green flag, it's going to be a white flag, which is that we are at peace right now, but we are ready if there is a problem.
And we'll follow the Fed.
Exactly. Fed bhi kuch nahi karega, trust me.